Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery.
Hi, good morning everyone. I'm Teng Boo from Capital Dynamics again. Today's topic will be very interesting, and I hope that you all will be able to hear me clearly, that our audio is of better quality today, because what I'm going to share with you today, it's something that may help you enjoy good capital appreciation over the next couple of years. I think we all know that the New York stock market, whether S&P or NASDAQ Composite, have been trading at record high, and NASDAQ has been basically fueled by very strong rallies in shares of Meta, Nvidia, and so on. So the question is, if you are based here in Malaysia or outside US, there's one stock that would have allowed you to do better than S&P 500, NASDAQ, or even the US dollar. Maybe I can just show you some facts and some figures. Over the last 1 year, this is the performance in USD, right? The share price of icapital.biz Berhad jumped up nearly 48% in US dollar terms. In that same 1 year, this is up to 29 March 2024, NASDAQ Composite went up only 34%, and the S&P 500 managed to rise only about 28%. And of course, the broader Malaysian market, based on the MSCI Malaysia, actually fell about 1%. So in that 1 year period, up to 29 March 2024, right, especially for those of you who are in Malaysia or around this area, right in front of your noses, there is a stock that actually performed better than the best performing stock market in the world and the strongest currency in the world. Is 1 year a fluke shot? Then let's take a look at the 3-year return. Up to the same, 29 March 2024 from 2021. In US dollar terms again, the share price of icapital.biz Berhad jumped 49.34%. S&P only 32.3%. NASDAQ only about 24%. And the MSCI Malaysia in US dollar terms plunged 17.6%. So whereas 1 year, whether over a 3-year period, the share price of icapital.biz Berhad has been a very strong performer. I'm not talking about the net asset value, I'm talking about the share price, the market price, right? So the question now is, ICAP share price is trading near all-time high, maybe about 2-3 cents just below the all-time high. For those of you who didn't buy, for those of you who have sold, have you missed the chance, or should you be able to seize the opportunities that are going to come over the next couple of years? Right? So the question is, Is it too late for you to buy the shares of icapital.biz? Will it rise further? Now, to answer this question, to figure out how far the share price of icapital.biz will rise, we need to understand the bigger picture, the macro picture. So if you look at the index, the KL Composite Index from 1974 up to now, you see that if you look on the left hand side, where there's a red line from about 1974 to 1981, that was the best bull market that the KL stock market has ever experienced. It, as you can see from the chart, it rose continuously for about 6 to 7 years. Then subsequently, you notice that the KLSC, the KL stock market, has only been able to enjoy short rallies, short bull markets. It will go up 1 or 2 years, then it will come down again, it will pause, and so on. And what is even more worrying is that since the middle of 2014 or April 2018, when the KLCI hit 1,900 points, the Malaysian stock market has been performing poorly for many years, right? And now, 2024, the KLCI is about, give or take, 1,550 points. So the question is, for us to understand the big picture, what is the outlook? What will be the future trend of the KL stock market? I think first thing is, you have to look at the economic picture. And for Malaysia, the Chinese economy is important because for many, many years now, China is Malaysia's largest trading partner. And for many, many years to come, for a long time to come, China will still remain as Malaysia's largest trading partner. And in the years to come, China will be one of the largest investors in the Malaysian economy. So, as I've previously pointed out, China's economy remains very strong. In fact, I would even say that China's economy, even at this point in time, remains the strongest in the world. The recovery has been strong but uneven, right? Which is different from what has been described, the narrative that you read in the Western media. Let me just share some facts and figures. So, on a full year basis, right, not on the first quarter, second quarter, if you look at 2019, 2020, the last 5 full years, of course, in 2019, China's economy was growing far ahead of Japan, EU, and United States. In 2020, the year when the pandemic started to break out globally, China's economy was the only major economy in the world that was still growing. You saw Japan, which is blue in color, EU, the black column, and America, the green column, all of them shrank. In 2021, China was way ahead again. In 2022, China was almost the fastest, just a little bit below EU, but ahead of Japan, ahead of America. And in 2023, when you read the Western narrative, you know that the Chinese economy is struggling, the Chinese economy is about to decline, the Chinese economy is this, the Chinese economy is that. But the fact shows that the Chinese GDP expanded by about 5.2, 5.3%, more than double the rate of the US economy, which you have been told in the Western narrative, the Western media narrative, that is so strong and so on and so forth. Even, recently, Joe Biden, the current American US president, said that the US economy is the best in the world. But the figures don't show. The figures don't support the fact that the Chinese economy is weak. The figures that you see, 2019, that was before pandemic. So even with the pandemic, China was still outperforming. More importantly is, even with the problems facing China's property market, the overall Chinese economy is still growing robustly. If you remember in 2007, 2008, 2009, 2010, when America led the world into a global financial crisis, followed by Europe, UK, that was because of their American housing crisis. So you see the strength or the weakness of an economy. In the case of America, the mortgage crisis led to a banking crisis in America, led to the stock market crashing, and to a serious recession, which took the US economy many years to get out from. China's property problems are not small. I'm not saying they are small, but you look at the situation, how the Chinese government has managed the economy, despite, and more importantly, in the case of Europe, UK, and US, the property crisis that they faced was due to a bubble, due to poor governance. In the case of China, the problems that the property sector is facing is intentional. The Chinese government wants to reduce the importance of the property sector in China. The Chinese government wants to reduce over-gearing, too much borrowing, too much speculation. So they are purposely using the policy to soften the property sector. But my analysis tells me that the property sector in China is not weak. It is being fundamentally transformed, intentionally and very wisely by President Xi Jinping. Because if he doesn't do it, if you look at the way the property sector is growing in terms of importance to the GDP and so on, in terms of the increase in corporate borrowings in China, if that is not controlled, you let that continue, in the next 10, 20, 30 years, Chinese economy will be in trouble because it will be too reliant on a single sector, the property sector, which is different. Relying on the property sector, which is also interacted with a lot of borrowings, is different from relying, for example, on the manufacturing sector. From an economist point of view, the property sector is a non-productive sector. So they realize the risk, the danger, and they have to take the action now. Unfortunately, it happened at the same time as the pandemic, and of course the US-China geopolitical tension. But even with all that, even with all those well-known problems, China's GDP, as I showed you in the last diagram, was still growing at the rate much faster than all the other major economies, double the rate of US in 2023. So I think in 2024, this year, China's economy will emerge even more robust and even more dynamic than before. Look, today's talk is about icapital.biz, Berhad. It's about Malaysia, the Malaysian stock market, Malaysian economy. So when China's economy performs better, Malaysia is in an excellent position to benefit from this. As the largest trading partner, definitely. And with excellent relations between Malaysia and China, I think Malaysia is among the countries in Asia Pacific one of the best positioned to benefit from a stronger Chinese economy. The other crucial thing for Malaysian stock market is this. Now I'm showing you two charts here. On the left hand side is the index for the Stock Exchange of Thailand, the Bangkok Stock Exchange. On my right is the Jakarta Composite Index for the Jakarta stock market. I show these two charts to illustrate one simple point, that for a sustained bull market, especially in a developing country like Malaysia, you need political stability. On the left is the Bangkok index. You see the red rectangle, the big red rectangle, that's from about 2013 up to now 2024. In that rectangle, you see that the index for the Stock Exchange of Thailand is volatile, up, down, but the trend has been flat. That's because in those 10, 11 years, Thailand faced unprecedented political turbulence. In 2013, I think it was 2013 or 2014, where the Prime Minister of Thailand at that time, the sister of Thaksin, was actually ousted. Before that, Yingluck, that's the name of the sister, won the election, the general election, with a landslide victory. But despite that, she was able to be ousted by the opposition in Thailand in 2013-2014. So after that, Thailand's politics went through hell. And you can see the result in the stock market. On the other hand, on the right hand side, in the Jakarta Stock Exchange experience, you see there are three red arrows on the index. One around 2004, that was when SBY became president of Indonesia in 2004. The second arrow is about 2014, that was when Jokowi became president of Indonesia. The third arrow, that is when the recent election was concluded, when Prabowo won the presidential election. So in that 20-year period, from 2004 to 2024, Indonesia had only two presidents. That is political stability. So simple case study here, Thailand versus Indonesia. So Malaysia, as you all know, since 2020, we have been facing a lot of political turmoil. And it's only recently that we see some light at the end of the tunnel. We have written in iCapital, our publication, in our weekly publication, we have written for a long time that the longer term trend of the Malaysian stock market is uncertain, because we advise our subscribers that we have to wait for another 1 or 2 election cycles before we can see better clarity on Malaysian politics and policies. This was written in 2017, 2018. So since that 7 long years, Malaysia has gone through 2 election cycles, one in 2018 and the second one in 2022. So after this turbulent period and after the 2022 election, we have the current unity government. So it appears that Malaysia is in a stage of political stability. And to sort of add on, to sort of support our observation that political stability has arrived in Malaysia, is the fact that the former finance minister, Tun Daim, has been charged. The sons of the 2 sons of the the 4th Prime Minister have also been charged. I think that shows confidence on the unity government to take such high-profile actions. Linked to this political stability is the fact that, as I have talk about this in my other recordings, that the destructive seventh Prime Minister of Malaysia is heading for his final days. His very poisonous voice, his very toxic messages are now fading into the background. Now, is this important? The fact that he is heading to the days of his final days, is that important? Because most analysts, most investors, most Malaysians do not see the great importance of this very positive development. And it is because of this one trend, one of the many trends that I'm seeing, which is why nowadays I'm bullish on the Malaysian stock market. Remember, I mentioned to you what happened in Thailand when Yingluck, the sister of Thaksin, was ousted. Remember, she was won. In 2011, she won with a landslide victory. But because the opposition was so strong, that's why she was able to be ousted. So in Malaysia, the same thing. You may have a strong government, a strong prime minister, but if the opposition is really united and has a very strong force behind it, they can force the prime minister out, as experienced in the case of Thailand. So not only do we need a strong current government, but we also need to have an opposition that is not so effective, that is not so united, that's not so powerful, that they can do all kinds of damages. So let's take a look and see what has this seventh Prime Minister done over, I don't know, he's been in Malaysian politics like forever. So first thing is his economic, I've shared this in our other live sessions. You can watch, I think I've got 3 or 4, just based on the lousy economic performance of Malaysia's 4th and 7th Prime Minister, right? But today, I'm not going to focus on that. What I'll show is what he has done, what damage he has done to the other Malaysian Prime Ministers. Let me quickly run through. His biggest achievement is that he was very successful in attacking every single Malaysian Prime Minister. Every one of them. Even starting from the very first Prime Minister Malaysia has. In 1969, he was able to lead a movement, a bunch of people within UMNO itself, to force Tunku Abdul Rahman to resign. Tunku Abdul Rahman, of course, is Malaysia's first Prime Minister. And then in 1978, he nudged Sulaiman Palestine to challenge Hussein Onn at that time. And that was a move where many Malaysian analysts signal the beginning of the end of Hussein Onn's political career. Even though at that time, Hussein Onn managed to fend off Sulaiman's challenge. And who was the person who encouraged Sulaiman Palestine to challenge the Prime Minister then? Malaysia's 4th Prime Minister. In 1978, he was already the Deputy Prime Minister. 1987, he weathered a challenge, and the challenge came from the Deputy Prime Minister at that time, Tun Musa, and the Minister of International Trade, Tunku Razaleigh. Both of them actually were exiled into political wilderness. 1993, he did very little to support his the Deputy Prime Minister at that time, Ghaffar Baba, because Ghaffar Baba was crumbling under the challenge of a new rising star by the name of Anwar Ibrahim. And the fourth Prime Minister used Ghaffar Baba temporarily. He was more interested to bring another person. He was more interested to bring Anwar Ibrahim in. Then, of course, you know, by 1998, the Malaysia's fourth Prime Minister sacked Anwar Ibrahim, right? And charged him for all kinds of stuff. Then in 2008, I think most of you are old enough to know that through his very fierce attacks, public criticisms, forced Abdullah Badawi to resign. Just so that Malaysia's fourth Prime Minister could put in Najib. Now, all those that I quoted to you from 1969 up to 2008, all those came from a research publication from Brookings Institute in America. So it's not my own creation. Then in 2014, Najib was the Prime Minister at that time, and even before 1MDB captured all the attentions, Najib was really attacked by Malaysia's fourth Prime Minister. Malaysian Insider in August 2014 wrote this, right? That the social media is abuzz with shares and comments, right, over the Malaysia's fourth Prime Minister's criticism on Dato Sri Najib at that time. And even the past Research Centre Executive Director, Dr. Zulkifli, tweeted in 2014, Tun, give us a break. Let Najib run the show because we haven't seen much. Of course, you know what happened after that, right? But this was even before all the fiascos of 1MDB came to light. So what we can say is Malaysia's fourth and seventh Prime Minister has accomplished the signal feat of being involved in some way or another in almost every political crisis that has affected UMNO since 1969. So now, as I said in last year's Investor Day talk on 5th of November 2023, right? That part is ending. That era of Malaysian politics is ending. So the current unity government should be able to have a less troublesome opposition to deal with. The other crucial thing, the other positive thing for Malaysia from now going forward is that Malaysia's economic structure and fundamentals are very nicely suited for the global environment in the coming years. Remember, I mentioned in 1974 to 1981, Malaysian stock market enjoyed an uninterrupted bull market for 6 to 7 years. So can Malaysia have such a rally again? That is where you have to look at the economic fundamentals and our economic structure. So this chart shows you, I hope you can see clearly, it shows Malaysia's GDP on a quarterly basis. Right? The last quarter is fourth quarter 2023. You look at the column which is red in color, that shows the contribution from the external sector, that means exports minus imports. In the last two quarters of 2023, in the third and the fourth quarter of 2023, you can see net exports were negative contributor. And before that, in the second quarter of 2023, it was not negative, but it was not positive either. So what I'm trying to show is that net exports has been a drag on the Malaysian economic growth. But in the coming years, I think you should see a positive change in that trend. So if you look at export performance of a few Asian countries, Malaysia black in color, China red in color, South Korea yellow in color, Singapore blue in color. All these very strong exporters face weak exports in 2023. All of them went down more or less at the same time. But what is fortunate is that towards the end of 2023 and in the first few months of 2024, the exports of Malaysia and the other Asian exporters are recovering. As you can see on the right hand side, they all have moved into positive territory. So that will be good for Malaysia because our economic structure is very geared towards exports. And it's geared towards a particular type of exports. E&E, electronics and electrical exports, as a percentage share of Malaysia's total exports, have grown over the years. It's becoming more and more important now. 33% in 2013, by 2023 is up to about almost 41%. That is a lot from one single sector. And out of the E&E exports, about 70 to 80% of them are semiconductor related. And as we know, the global semiconductor industry is already on a recovery cycle, and it's expected to continue. So, given that Malaysia's economic structure is biased towards exports and exports of a particular type, and this semiconductor is the one that is growing, so you find that GDP growth for Malaysia in 2024 and 2025 will be pretty good. The next other major sector that the Malaysia economy would enjoy positive trend would be tourism. This is the tourist arrivals into Malaysia. You notice, of course, in 2020, 2021, 2022, tourist arrivals in every country all over the world fell off the cliff. Malaysia was no exception. And the recovery has come in pretty strongly. That also has been experienced in every country. In the case of Malaysia, we are still a little bit below the pre-pandemic level. But underlying this, what you cannot see is that the tourist arrivals from China, although total tourist arrivals have starting to get close to the 2018-2019 levels, the arrivals from China are still below the pre-pandemic level. That's due to a few reasons. Partly because China opened up much later, and the Chinese travelers have only started to go out, not just to Malaysia, but to Singapore, to Australia, and so on. And now, with the visa-free arrangement between Malaysia and China, and with increased flights between Malaysia and China, you see that the tourist arrivals into Malaysia I'm quite sure that it will surpass the levels that we experienced before pandemic. And tourism industry contributes a fair bit, not as much as E&E, but still because it's labor intensive, and it will benefit the Malaysian economy in multiple ways. And in the case of tourism, the tourists visit Malaysia all over the place. It's not just going to Malacca, it's not just to Penang, it's not just to KL, it's also to Johor Bahru, it's also to Sabah, and so on. So the country as a whole will be benefiting. And if you put all the pieces together, tourism, the major sectors of the Malaysian economy, the exports and so on, Malaysia's GDP in 2024 and 2025 will be pretty robust. In fact, my own forecast for the Malaysian economic growth in 2024 and 2025 is actually, we see better GDP growth than Bank Negara's forecast, based on some of the reasons that I explained earlier. And then for the Malaysian stock market, now this I've shown before also, the participation of foreign investors in the Malaysian stock market. The black line is the KLCI, the blue column would be the foreign buying or selling. Anything below zero is net selling, anything above zero is net buying. So look at the left hand side, before the 2013 general election results, generally the trend was foreign investors were net buyers of Malaysian stocks. After 2013, they were generally net sellers of Malaysian stocks. Now 2024, we have this up to March 2024, the trend is promising because you have a bit more net buying than net selling, but it is not as decisive as before 2013 yet. The foreign buying, I think, should pick up. First thing is, there's now political stability, as I mentioned earlier. Second thing is Malaysia's economy is well positioned to benefit from the recovery in semiconductor and China's economic growth. And also the forex angle. The US dollar is peaking, not just against the ringgit, but it's peaking against most other currencies, because they expect the US economy either to be slowing down, and therefore the US Federal Reserve will be cutting interest rate, or the US inflation is under control and therefore allowing the US Federal Reserve to cut interest rate. So interest rate differential between the US dollar and other emerging currencies should not widen, but it may start to narrow in 2024, benefiting the ringgit. So you find that from the foreign funds, foreign investors' point of view, political stability, ringgit exchange rate stability, robust economic growth, good corporate earnings, and therefore Malaysian stocks will be attractive to them again. So the question is it time to buy Malaysian stocks? The same chart from 1974 up to now, as you can see in the red line that we've drawn for you, this is a very major support line. It goes back to 74, it touches 1997, and recently in 2023. So far, this red support line is holding up well, and I expect the support to hold. And where do we see the KLCI reaching? What is our target? Over the next 3 to 5 years, we see the KLCI reaching 2,005 to 3,000 points. If it reaches 3,000 points, it will be about double what it is now. Now can we take a look at the previous chart that I showed you earlier? Now that would be a very positive outcome, because if you look at the KLCI's experience since 1974, like I mentioned, only 74 to 1981 you saw sustained bull market. So if in the next 3 or 5 years you can see a doubling of the KLCI, you're going to get something not exactly the same, but something better than the other bull markets that we've had, and something that's more similar to the 74-81. I really hope that I'm correct, because I think Malaysia is like in a sweet spot where all the signs are pointing towards a sustainable bull market. So if in that situation, if we are correct, what is the best stock for you to buy? I mean, there are plenty to choose, right? There are plenty to choose. So for us, it's very simple. If you want to just have one stock where you don't have to go and figure out and worry about it, and then you can just hold on to it and ride the bull market, icapital.biz Berhad is the best stock for you to invest in. The risk is low, the return is high. As I've shown you at the very beginning, in the last 1 year, in the last 3 years, the share price of icapital.biz Berhad outperform S&P, NASDAQ in US dollar terms. It's very hard to find a Malaysian stock like that with low risk at the same time. So why? Now this is a chart, a weekly chart of the share price of icapital.biz Berhad up to 2nd of April. For those of you who are more interested in the shorter term, like in the next 6 months, 12 months kind of time horizon, if you look at the chart itself, there is has formed a triangle, the blue lines on the right hand side. In charting terms, that is known as a continuation pattern. That means after the strong rally, right, where it moved up from about 190 to 290, after that strong rally, it consolidated in the form of a triangle. It has broken out on the upside of the triangle. That is a bullish sign. And that bullish signal is confirmed by its weekly MACD, the indicator at the top, where you see a red line and a dotted blue line, right? Now that red line in the MACD has crossed above the dotted line. That is another bullish signal. So you notice that based on the charts and the technical indicator, they are pointing towards a further increase in the share price of icapital.biz Berhad. Based on this chart pattern, what is the target? It's going to, based on the triangle and the spike, it's expected to reach 380 to 390. That's based on the technical analysis. If you don't like technical analysis, because like I said, it's meant for more than 6 to 9 months, 12 months, then we look at more on the fundamental basis. So, if our prediction is correct, that the KL stock market is going to enjoy a sustainable bull run, ICAP's share price will also jump. Not only that, but in a bullish market, the discount to NAV of ICAP will disappear and the premium will turn up. So you enjoy double returns. You enjoy the increase in the share price, in the NAV, and you enjoy the extra gain that you made from the discount converting into a premium. That's double return. So let me just work out some potential price targets for you based on two scenarios. Scenario A, where ICAP's net asset value doubles in 5 years' time, 2029, right? So now the NAV is about 393, it doubles to 7 ringgit 86 cents. So if by that time the share price of ICAP equals its NAV, then the share price of ICAP will increase by 158% or 4 ringgit 81 cents. It will rise to 7 ringgit 86 cents. But in the bullish market, like I mentioned, the premium will come back, because not just for ICAP, in bullish markets anywhere in the world, closed-end funds will start to trade at premiums. So if assuming that ICAP trades at a 10% premium in that 3 to 5 years' time, then the share price of ICAP will increase further. It will go up to 8 ringgit 65 cents, or it will enjoy a return of 184%. Now, for those of you who may think that can a premium come back, just to remind you that from 2005, from the very first day of its listing in October 2005, where ICAP enjoyed a 1% premium, for the next 3+ years, ICAP share price was trading at a premium to its net asset value. The highest premium that it experienced at that time of 07 was 28%. 28% premium. Now let's look at scenario B. Same thing, what is the price target in 2029? Assuming that the KLCI doubles, right? For the last 20 odd years, since 2005, the NAV of ICAP has outperformed the KLCI by 6 percentage points every year. Every year, if let's say the KLCI went up 2%, the NAV of ICAP has gone up by 8%. So for the last 20 odd years, it has been outperforming the KLCI by 6 percentage points. So if you assume that the KLCI will double in 2029, then the NAV of ICAP will reach a high of 10 ringgit 19 cent. Right? So if the share price of ICAP only equals its NAV, then the share price will increase by 234%, or 7 ringgit and 14 cent to reach 10 ringgit and 19 cent. That is a very impressive gain. But in such a bullish situation, the share price of ICAP will trade at a premium to its NAV. Assuming just only 10% premium, then the share price of ICAP will increase by 8 ringgit 16 cent to reach 11 ringgit 21 cent from its current price now. Well, based on this computation that we did, the price was 305. So from 305, it will climb, it will surge to 11 ringgit 21 cents. So either way, whether scenario A or scenario B, ICAP share price will at least double to 786 or rally further to 1121. The other thing that you have to also bear in mind is that the risks are low. ICAP is a very conservatively managed fund. Very low risk, high returns. So if you think, can we look back at the gains? If you think that the share price doubling to 786 or rising further to 1121 is not attractive to you, think carefully. Because many investors, especially individual retail investors, in the last 5, 10, 20 years have lost money in the stock market. So I'm not sure about your own experience. If you think that you can pick a stock better, by all means. If you have that skill, the time, the resources to do better, by all means. But if you're like most investors who just want to have good returns and then you don't really have to monitor it, I think icapital.biz Berhad is ideal. So once again, let me just very quickly conclude. We turned bullish on the Malaysian stock market back in November 2023 after many years of being bearish on the Malaysian economy, Malaysian stock market. So after something like 8, 9, 10 years, we became bullish. And I'll share with you my reasons why that is so. So if you are the type who says, well, I need some dividends and I cannot just have capital appreciation, we also like to remind you that icapital.biz Berhad has got the most innovative dividend policy in the entire world. I'm not exaggerating because there's no other listed company in the world that has got such a dividend policy. The typical dividend policy is like what I show you here. Maybank says that they will pay 40 to 60% dividend payout based on net profit. Tenaga 30 to 60% based on net profit. Maxis, Inari, all of them will be based on net profit. But net profit is something that's extremely hard to forecast. It can be volatile for some business. In the case of icapital.biz Berhad, the basis of the dividend policy is completely different. Let me share with you. You've got two components. One is the base rate dividend. which will be 1% of its NAV. So the NAV, you know, is over the long term has been going up. So you know that your base rate dividend will always be going up, 1%. So now it's 393. You get 3.9 cent dividend. But as I've shown you, if the NAV doubles to 7, 8 ringgit, then your base rate dividend will go up to 7, 8 cents. That's just the base rate. Then you have a top-up rate dividend in case there's a discount of the share price to its NAV. So you get 8% of that difference in the form of dividend. Then your total dividend will be the two of them aggregated. So what am I saying is that not only do you enjoy the potential capital appreciation, but you also get dividend, good regular dividend, predictable dividend. One part predictable, the base rate, the top-up rate is a lot less predictable, but should the discount narrow, your dividend of course will be lower, but you will be compensated by higher capital appreciation. So either way you win. Right? I'm sure you agree with me that ICAP is the best stock to invest in. So share the video, let other fellow investors not lose money, like, and then if you have comments, please put your comments and we will try to answer whichever one that's relevant. I thank you again for listening to me. Have a good weekend and Selamat Hari Raya.